Welcome in. Today I'm speaking about a popular retail stock, SoFi Technologies. It is a position I've had in another portfolio for a couple of years, and I want to use it as an example to show you how important it is for you as investor to do projections on a stock. Then after that I'm going to share if I'm buying, holding or selling at the current prices, and I want to touch briefly on a bit of stock buying strategy. I have some very interesting info to share with you today, so I hope you will enjoy it. If you're new to the channel, your subscription makes a real world impact here. If you're wondering how, then please check out the introduction video. The link is up here and in the description. Now let's dive into SoFi. The full name is SoFi Technologies, ticker is SOFI. It is an American financial technology company founded in 2011 as a student loan company. It now operates as a nationally chartered online bank, and it is a lending provider to other financial institutions. It has the following three segments. 1. The lending segment, providing personal, student and home loans. 2. Financial services, offering banking, investing, credit cards and insurance. And 3. A technology platform which includes its Galileo payment processing for other firms. These three segments work together to offer a full suite of financial products, from borrowing to saving and investing, all within a single digital platform accessible with the SoFi app. Why this is such a good business model is because when SoFi gets a new person as a customer on one of their products, then they are on the app and in the SoFi ecosystem, and that makes it much easier for them to cross-sell any of their other products they offer. And that is the flywheel that increases the company size. So that was the short introduction on SoFi. Now let's look at my history with the stock and why it is so important to do even very basic stock projections. So in SoFi's Q4 earnings call in January of 2024, they already gave their longer term guidance of 55 to 80 cents of EPS for 2026. The stock was at about $7 then. Now even if you did just a basic projection, taking for example 60 cents of EPS from their guide and putting a 40 PE multiple on it, then you could have already seen that the stock was going to go up big, like a 3x in 2 years or something like that. But the stupidest thing happened. For the first 9 months of the year of 2024, the stock didn't go up at all. At times it even dipped to $5. I think Wall Street just didn't believe SoFi at all, because after that announcement, almost all of the analysts kept much lower EPS numbers for them in 2026. Some had estimates below 20 cents. It was ridiculous. I think a lot of analysts work for competitor financial institutions, and they just were told to be bearish on their competitor stocks. But yeah, that meant that the stock price stayed low for much of 2024, in the range of $5 to $8. And that gave retail investors that looked at the guidance and did a small projections and believed in SoFi CEO and management a great opportunity to buy the stock for cheap. I was one of those investors. And then the earnings started to rise every quarter, like SoFi had said they would. And they kept beating the analyst estimates, and so Wall Street had to capitulate to the view that SoFi was going to do a lot better than they had expected. And there is the lesson for you guys. Do your projections, and if you believe the guide from the CEO and the management team, then stick to your point of view, just buy the dips and it will work out. Just like it did for me with SoFi. And there is one stock that is giving me flashbacks to this SoFi situation right now. And that is this stock, the very first stock we bought for the portfolio. It is just turning profitable again, so you can't see where they're going with their current numbers yet. And they have a big EPS target for the next year, but the market is very skeptical if they can reach it. So sort of similar to SoFi 2 years ago, even though it's a completely different kind of business. So if you haven't yet, then be sure to check out this video later on. Okay, let's get back to the situation of SoFi right now and see if I think it's a good buy now for the future. So the 2026 guidance for SoFi is priced in much better right now. If you take the midpoint of 67 cents, then with a stock price of $26, that means a 39 forward PE for 2026. Now the CEO, Anthony Noto, is known to be quite conservative in his guidance. He likes to beat and raise numbers. He did that all of last year, so I expect him to start the year guiding towards the lower end of the range, so maybe 55 or 60 cents or so. But as the year goes along, I think they will beat and raise estimates, exactly like last year. And so I expect them to end up with 65 to 75 cents of EPS this year. Now keep in mind that if that happens, then that will be about an 80% growth rate compared to their EPS from last year. That is very impressive growth. Now I don't expect them to keep up that high growth rate after this year. Here are the longer term targets that the SoFi CEO has stated himself. The long-term earnings growth rate he gave was 20 to 25%. Now it is not logical for the growth rate to immediately drop from around 80% to only 25%. It will slowly trend there. And that is logical because of the law of large numbers. So if the company grows in size, then the percentages will go down. The question is, how quickly will they trend down to that long-term range? That is why I've prepared two scenarios. A conservative base case where growth will trend down quicker, and a bull case where growth will stay a little higher but still trend down to the mentioned range. In the base case, you can see that I've assumed only 61 cents of EPS this year, so at the low end of their 55 to 80 cent range. That would be a 70% growth rate from last year, and then trending down to 35% next year, then 30, then 25, and only 20% in 2030. I think this is very conservative, even a bit bearish to be honest. In the bull case, I've assumed 74 cents of EPS in this year, so near the top end of their range. That would be a 90% growth rate from last year, and then trending down to 40% next year, then 35, then 30, and 25% in 2030. They lead to a range of 161 to 228 of EPS for 2030. Estimating a PE ratio for SoFi for 2030 is not so easy. As we spoke about, SoFi is part lender, which is very cyclical, part bank, and banks never get high PE multiples, and part technology platform, which gets a higher multiple. And their lending platform enables them to only keep the loans they want on their own books, so that also increased the multiple a little, I think. I'm being cautious here with the multiple because I'm not sure what the market will give them long term. And assuming a 1.3 PEG ratio for them on their 2030 growth, that leads to a 26 PE for the base case and a 32.5 PE for the bull case. Multiplying the EPS numbers with those PEs, we get a $42 stock price for the base case in 2030 and a $74 stock price for the bull case. That's a wide range, and I personally think that SoFi stock will be somewhere in the $50 to $65 range in 2030. Now the current stock price is around $27. That leads to a 90 to 140% upside in the next 5 years. Now that is not a bad return, but it's also not great, especially when comparing that to the returns of the other 4 stocks I've already made videos on. And that means that if, for example, there is a downturn in the economy, then you don't have much of a margin of safety with this stock. But what if, for example, the current stock price would drop to $23? Then we would be looking at a nice 120 to 180% upside in 5 years. That's much better. So what to do? Just wait and hope the stock drops to 23 and then buy the stock? But what if there was a way to already make money waiting for the stock to drop? That would be great, right? And lucky for us there is. It's called selling cash secured puts on a stock. And that is exactly what I've already been doing on SoFi in another portfolio I have. Every time the stock has gone below $26 in the last months, circled in the chart, I've been selling the 23 put on the stock. Now, since the Purposeful Investor portfolio is a new portfolio, I still have unallocated cash in it, and I can use this strategy here also. On average, I receive about $50 for a 2-week put. So that is about a 2.2% yield on the $2,300 I hold as cash in reserve for it every 2 weeks. That 2.2 times 26 periods of 2 weeks is about 56. So that means that if I could use the strategy every 2 weeks for a year, that I would make about a 56% return just waiting for SoFi to drop to $23. Now that's not bad at all. Now be careful with using the strategy right now because SoFi Q4 earnings are coming up on the 30th of January and the stock can move big on earnings, up or down. Now I'm using this strategy on a couple of the stocks I've made videos on. And this strategy is one of the big reasons why the portfolio has had a great start to the year and is already up over 8% in the first 2 weeks. So if you're interested in hearing more about what the advantages and drawbacks of this strategy are, and what to exactly look for when using it, then leave me a comment below and I will do a deeper dive video on it. So this was the video analyzing SoFi stock and a quick intro into some stock buying strategy. Thank you for watching. It was not financial advice. I hope you enjoyed it. If you want to see more about that strategy, then click the like button and leave me a comment. If you have any other questions, also please put them in the comments. Now that your channel is still small, it is the best time to ask a question. You have the highest chance that I can react to it or do something with it in a video. Click the links on screen to view the other stocks we've bought for the portfolio. A new video of the next stock I'm buying is coming up very soon. So subscribe and hit the notification bell if you're interested in that. And by subscribing, you will help create more impact for nature. So thank you for that. Because good deeds compound too.